Hi folks, in this video I'm going to show you how to fill out a Payment Protection Program application form. In an earlier 30-minute video that I did a couple days ago, I explained step by step in detail what the program is all about and how it's going to work. Now we're going to be focused now on filling out this application. And there's sort of a magic number that you have to come up with, which is the average monthly payroll, which is actually not exactly what it means. It's sort of there, and then 2.5 times that. So we're going to cover that. We're going to focus on that on this video. But first, let's do a quick summary of what exactly is the PPP loan, the Payment Protection Loan. We're going to talk about how to calculate that maximum amount, which is 2.5% of payroll cost, and we'll describe what payroll cost means. Then we'll talk about how to calculate the forgiveness, because one of the major features of this loan is that it will be forgiven. It will be free money for business owners to keep the doors open. We'll also talk about how to apply for the loan. So we'll talk about the actual form, what are the required documents from the bank. And lastly, we're going to talk about how accountants, bookkeepers, and business consultants can get paid to help their clients through this process. So if you fall into that category, you don't want to miss that very last part. So what is the PPP? It's $350 billion that the government has allocated through the stimulus package to help small businesses keep the doors open, pay their employees. Only small businesses and nonprofits with less than 500 employees are able to participate in this program. No more than $10 million per business. So it could be any amount from 0 to 10 million. The maximum loan amount is 2.5 times average payroll cost. We're going to talk about how that works in a second. And it's actually going to be a 2-year loan at 0.5% rate. And the payments will be deferred for the first 6 months. And then the next year and a half, you have to pay it at that 0.5% rate. And as I mentioned, it is forgivable. Up to 100% of the money will be forgiven. You don't have to pay it back as long as it's used to pay payroll, rent, utilities, and other qualified purchases, which we'll speak about. That forgiveness period is based on the day you get the loan and then 8 weeks later. You must apply between April 3rd to June 30th when they will stop taking applications. Now, the application process is through a bank. So you have to go through your bank or an approved SBA lender. It will be funded within weeks, which is typically half the time that a standard SBA loan takes, which is closer to 30 and 45 days. I used to work in a bank, so I remember exactly how long that took. It will not require collateral or a personal guarantee, which means they're going to look at the person's credit, but even if they don't have great credit or they don't have to personally guarantee or have collateral, that won't matter. What matters here is you have employees and you're going to bring them back and you're going to pay them with this money. There will be a separate program starting April 10th for businesses that don't have employees, for self-employed individuals that have businesses without employees. There'll be an entirely different program, and we're not going to discuss that at all in here because the details about that are not available yet. Now, you can rehire the employees that were laid off after February 15th, so you can bring them back with this money. Now, how do we calculate this 2.5 times payroll costs? So this is what we're going to do. We're going to look for a 12-month look-back period before February 15th. Now, most people are going to do all of 2019. That's going to be easier and cleaner, but some people may choose to do February 1st, 2019 through January 31st, 2020, for example. So it's any 12, it's the previous 12 months. That's exactly what the guidance says. Now you're going to take the gross wages of all the employees up to 100,000. Any amount above 100,000 will not count. You're going to take all the health insurance cost to the employer. The portion the employee pays doesn't matter. All the retirement benefit payments or costs to the employer, such as pension matching, 401k, simple IRA matching, all the costs to the employer for benefits. And lastly, state and local tax assessed on compensation. So any taxes related to employee compensation that the employer had to pay, they will be included here. Now there's a big asterisk in this one, and this guidance says that independent contractor wages and commissions up to 100,000 per contractor, it's included. However, all over the guidance, it says the word payroll. And if you know a little bit about payroll and independent contractors, the word payroll has never ever been used to describe an independent contractor. But there's specific text that says that independent contractors can be included. So this is going to be up to the lender to accept this. And I think it's going to matter how you present it, how you put it together, with that the lender will or will not accept your independent contractors. This is why right now your accountant and someone savvy with numbers and accounting and putting together loan documents is going to be your very best friend. Now, how will the loan be forgiven? So as I mentioned, from the moment you get the money to 8 weeks later, you're going to have to prove with documentation what the total payroll cost is, what the benefits cost was, what your rent was, what your utility was, and there's going to be other qualified expenses that you need, essential expenses that you accrued up to 12/15 that you had to pay during the period. So you add all those things up and you'll be able to calculate what the amount forgiven will be. Now, starting 60 days of funding, you can formally request the loan to be forgiven. Up to 25% of the loan could be forgiven with non-payroll expenses. 100% of the loan could be forgiven with payroll expenses, and at least 75% of the loan amount needs to be spent in payroll in order to get forgiveness. You must maintain full headcount, so the forgiveness will be reduced for every person that you lose or that you fire or whatever. And the payroll amounts cannot be reduced more than 25%. So you have to maintain most of the original payroll amounts that you were paying them. And you will have until June 30th to restore full employment, which means if you're going to rehire people that you had to get rid of, that you had to lay off, you have the chance to do that. Now, what are going to be the required documents? You're going to need the SBA 2483 form. You're going to need documentation on the total payroll costs to substantiate the 2.5 times of the average payroll cost. So that's going to be W-2s, W-3s, 941s, 940s, 1099 miscellaneous for subcontractors, state and local payroll, related forms, invoices for health insurance and retirement benefits. You're going to have to get all those documents to be able to prove what that payroll cost, that average payroll cost times 2.5 is. You might need a special form for agents, accountants, consultants, attorneys, whatever, that they're going to be assisting people on putting these things together and wanting to get paid from the lender as an agent of the loan. And that form, which is Form 159, looks like this. And this is where the agent will disclose how much they're charging and all their information. They probably need to register through the lender as an agent to be able to do that. I actually don't know what that process looks like for this specific PPP loan. No one really knows until you start taking applications. So if you're an accountant or consultant, you probably want to start building relationships with these lenders to make sure you're set up as an agent to get paid a piece of this. And we'll talk about the details in terms of how much in a second. Actually, let's go to that now. So let me go into the lender document. This is from the Treasury. And you're going to notice that somewhere here it says who can be an agent, an attorney, an accountant, a consultant, someone that prepares the applicant's information, that wants to be compensated by the applicant. And here it says the specific guidelines. Loans 350,000 or under, 1%. Loans greater than 350 to 2 million, 0.5%. Loans over 2 million, 0.25%. So there is a mechanism in the law to pay agents that are helping people through this process. And lastly, you're going to need a certification from the applicant. So we'll talk about that. We have a slide on that. Now, the lender itself can add additional requirements. For example, the lender could ask you to prove the business start date, to prove the current ownership of the business. It might require you to have a bank account with that bank prior to the lending process. They might ask for their own version of the application that I showed you earlier, the 2483, that might be slightly modified to their needs, or they might have an additional borrower's information sheet that you have to fill out. They might ask you for last year's tax return. They might ask you for 2019 financial reports and year-to-date 2020 financial statements. So get that stuff ready just in case, and you want to be first in line on this application process. I'll explain that in a second as well. The certification of good faith, basically the borrower is going to have to initial next to a couple of boxes that say, so one, you must have economic uncertainty that you'll be able to support your ongoing operations. Two, you must certify that you will use the funds for payroll and to pay facilities. 3, that you will not accept another loan under this program. 4, that you will provide documentation at the end of the program to prove what you used the money for so you can get it forgiven. 5, you're going to have to pay back the non-forgiven portion. 6, you cannot use the money for gambling or illegal activities. And the last one is that you will be persecuted to the full extent of the law if you falsify the documents or commit fraud. So that's a certification of good faith. Now back to the application. There's basically 3 really important numbers that you need. You need the average monthly payroll. You need 2.5 times that, so it's just a calculation, and number of jobs, which basically means number of full-time employees. Remember, the intent of this is for a politician in Washington somewhere to come out on TV and say that this bill saved 1 million jobs or whatever. So they're going to be focused around businesses that have employees and businesses that save jobs or bring back jobs or prevent people from going to claim unemployment. So understand that if you're a business without employees, you're going to be in the lowest priority of this. Now, subcontractors may or may not be treated as employees. That's actually a little bit left. We actually have to wait for the banks to give us specific guidance on how that works. But I put together a spreadsheet that I'm using already for my clients to start prepping for these loans. So number 1, I have 5 lines here. Line 1, I'm going to put the total payroll for 2019 from the W-3 form, box 5. If you don't have a W-3, you can grab all the W-2s and add up all the box 5s together, and we put it there. Then I'm going to take all the 1099 subcontractors that I didn't pay $100,000 or more, or cap it at $100,000, and the ones that I intend to keep paying, and the ones that are still the equivalent of a full-time employee. That's how I'm framing the application together for subcontractors. So I'm putting the amount in there. Then I'm putting the employer paid health insurance cost, then the retirement plan cost, the employer paid retirement plan cost, and then any state and local employer taxes. So I'm adding all that up and I'm coming up with my total annualized payroll cost. Then I'm taking that number and I'm dividing it by 12. And then once I divide it by 12, I'm taking that number and multiplying it times 2.5. So when I go to my banks to request the PPP funding, it would be based on this. That's how I'm putting the package together for my clients. Now, when it's time to get the loan forgiven, the way we're going to put the forgiveness document together is we're actually going to look at the funding day, the day that we actually got the money, and then 8 weeks later, so all the spreadsheet is all pre-set up for this, and I'm going to add up my total payroll cost. So I'm going to go to my payroll company or go in my accounting software and make sure that I have my total payroll cost in there, my gross payroll cost. Then I'm going to take all the independent contractors that I rolled into payroll. So my strategy is that any independent contractors that I used to get the funding, I'm going to roll them into payroll. So now they're part of payroll and there's no excuse that they cannot forgive the loan because I've actually made these people employees. So that's going to be my strategy. Then the employee benefits, and then we add up that total number and we get the actual total payroll cost. Then on the second part, I have the rents that I paid, the mortgage interest, the utilities, and any essential account payable that I had before February 15 that I had to pay in order to keep the doors open, for the lack of a better term. Then I take the total payroll cost, and I have a formula, I have a special formula in which I'm making sure that there's at least 75% of that in the total loan amount. And then I'm taking the total qualified expenses and I'm capping it with my formula at 25%. So with this spreadsheet that I put together, I'll be able to know exactly how much I would have to pay back and how much would be forgiven. So that's my magical spreadsheet that I put together, and I'm going to share this with my colleagues that attend a special training that I'm putting together. So that should make it drop dead simple to go into the bank with the right number, the average monthly payroll cost at 2.5 and the number of employees. And then the rest of the application, it's easy. You got name, address, you got the name of the owners, you have a certification that you haven't filed bankruptcy, that you don't have any indictments against you, that you don't have any criminal history. So there's a whole bunch of questions that you have to answer there. And then here it says I'm a U.S. citizen or a lawful permanent resident. I assume that non-US people will not have access to any of this. And then lastly, we have the certifications that we mentioned. So there's all the certifications that we mentioned. And one that I love, I think is really, really awesome, which is this one right here. To the extent that is feasible, I will purchase American-made equipment and products. I am passionate about manufacturing and American production. So I love the fact that they added that commitment that you're getting government money, but you're going to bring manufacturing back to America. I absolutely love that. One of the reasons I'm completely in love with this program, because I've always been into that sentiment of bringing manufacturing back. Anyway, so now you know what it looks like. If you are an accountant or a bookkeeper or a consultant, I'm putting together a training that's going to be a 3-part series. The first one's going to be April 3rd, Friday, April 3rd. The next one's going to be Friday, April 10th. And the last one's going to be somewhere in mid-June. It's going to be a 3-part series. And we're going to talk on the first one, how to give advice to clients about choosing the loan. The PPP loan is not the only loan out there. There's economic relief. There's regular SBA. There's implications for taking money. And are your employees even going to come back and even want to go back to work, during quarantine and that stuff? So we're going to talk about all those issues during that first webinar. And in that April 1, I'm going to show you an actual application once the applications go live. So I'm going to show you exactly what that looks like. So we have the actual real data from the bank. So we'll discuss that on that first one on April 3rd. Then on April 10th, we're going to talk about the second part of this program, which is the self-employed businesses without employees. So we're going to talk about how to help that group, because it's going to be probably a different type of application, a different process, a different calculation altogether. So April 10th will be focused around that. And then the next one will be mid-June somewhere. To be determined. It will be how to do the follow-up to apply for forgiveness, because the true value that accountants and consultants can give to their clients is to make sure the loans get forgiven, make sure this becomes a grant and relief, and make sure they don't have to pay this money back. So if you sign up for this program, you're going to access the 3 live webinars. I'll give you access to all the PowerPoint slides, the ones that I use here, the Excel spreadsheets, even with the updates that will be coming in the next couple of days. Those will be included in there. There might be some additional tools that I develop in the process as more information comes out and updates come out. And I'm also going to build a private Slack channel just for the people that sign up for the program, so we can all chat about our experiences. My goal is that accountants and consultants are in the forefront of helping their clients get funded. So I'm going to put the link somewhere in the description to sign up for that program. It's going to be $350, and I'm going to put a personal guarantee. If by this first session that you attend live or attend the recording, if you can't attend it live, the recordings will be available. If you're not completely in love with what I'm presenting to you, with the tips, the tricks, the information about SBA loans and other things, you'll get your full refund if you're not satisfied. So anyway, I hope the video itself was useful for you, whether you're a small business owner, a consultant, or an accountant. And as I have more details, I will be posting more information. Any other questions? Put them in the comments below. Hit like, subscribe to the channel, and I'll see you on the next one.